The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 8th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call, there is no limit to your potential. You know, perhaps said another way, there are more possibilities for each of us than we can imagine. So let me ask you a question. Is that your belief system? It's mine for sure, but think about the difficulties that you and I must overcome in order to believe that there is no limit to our potential. You know, from the time we're born, we're taught to think in terms of limits. Boundaries, restrictions, fences surround our property. Speed limits slow us down. Well, they slow most of us down. In fact, some believe that our endurance is limited. Do you believe that? Of course, look, you and I, we know that none of that is true. Every 4 years, Olympic records are shattered. And soon, we're going to be witness to that in Sochi out here. We're going to see Olympic records busted. Why? Because our potential is unlimited. So here's the trick. In this next sentence, folks, that's really important. In fact, you might want to write it down. It's pretty simple. It's 3 words. Life is consciousness. Now, what I mean by this is if we are conscious of our limitations in life, then guess what? So it shall be. Instead, folks, we must be conscious that our potential is unlimited. In fact, Albert Einstein once wrote, the most beautiful and most profound emotion we can experience is the sensation of the mystical. You know, for me, that means our minds are filled with ideas and thoughts that show us how to build or create the things our imagination can conceive. Always remember, there is no limit to your potential. Go out and create an extraordinary life. Let's go check out the potential in these markets here. Right now, we've got the Dow futures. They're trading off a bit. They're down 22 points. Traded out at 16,432. S&P futures off about a little less than a point here, trading at 1830. NASDAQ futures up 1.5 trading out at 35.50. King dollar up 16 ticks right now, trading at 81.14. We'll take a look at the currency market. In fact, what I've got on my screen here right now is the queen. It is the euro US dollar. It's a 30-minute chart. We'll come back to that here in a moment. So we'll take a look at the currency pairs. Hard currency, though. Goldilocks is off $7, trading out $12.22. Silver off 35 cents, trading out at $19.43. Light sweet crude down 8 pennies, trading at $93.60. Natural gas up about a penny and a half, trading at $4.31. Our call-in number 877-927-6648. A quick peek around the globe. The FTSE over in the UK is off 25 points. The DAX down 27. The DAX is up 12 points, trading out 94.93. Had a little party over in Asia last night, at least in the Nikkei. It was up 307 points. That's up 2%. Hang Seng up a little over 1%, up 283 points. And the Shanghai virtually unchanged, off 3 points. So where do we begin? You know where I want to begin is, at least what I want to make sure that we cover here this morning, is that I always want to make sure that we cover this because, you know, I've got so many different listeners that really are managing different levels of funds out there, long-term, intermediate-term, short-term. You know, there should be buckets of funds that you're managing. And I want to make sure, you know, because when I take a look at the stock charts, or certainly when I kick things off in the morning, I mean, I'm looking at 30-minute charts, 120-minute charts, ideally just to identify patterns out there that you can take a look at, that you see occur on intraday basis, so that you can learn those patterns in order to be able to trade on the longer-term time frame. So what I want to make sure that we do is we take a look at the long term, because for, you know, most folks out there managing their retirement funds, what I don't want you to do is get too caught up into really the daily noise out there. You really want to be taking a look at some longer term signals. So I want to make sure that we catch that. But as we start off by taking a look at a shorter term chart, meaning the euro US dollar, and let's go take a look at the euro US dollar from a number of different facets. Number one, the trend is your friend. I mean, there's no question about it. And the key is being able to identify and understand how do you identify not just the trend, but really the strength of the trend. That's why I developed the Rhodes Momentum Indicators. I'm not going to sit here and try to sell you on that, but that's why I developed it. That's really what you need to understand is, it's not enough that something is making higher highs and higher lows. Yeah, that's one trending tool, but you don't really understand the strength behind that move out there. You can use candlesticks. You can use volume. Number of different things that you can use, but it's why I created the Rhodes Momentum Indicator tools, strategies, the whole kit and caboodle. Now, the trend is your friend. So how do you know when a trend is changing out there? And there are signs for that, and we take a look at those types of signals. If we take a look at the Euro-US dollar, I'm going to move off of the 30-minute chart. We'll come back to it because it does show a little price relative strength divergence, which is being confirmed on the 30-minute chart. As long as it closes up a bit here at coming into the 9:30 time frame, says we got a little bounce underway. We're going to find out where that bounce is going to run into resistance. But let's start taking a look at the Euro-US dollar again on some different time frames. First, let's go take a look at the, let's see. The weekly chart may just show it all. Let me see here. Let me switch gears here just for a second if I can. Yeah, let's take a look at the monthly chart. So we're going to look at the monthly chart for the Euro-US dollar. Number one, what we can see here is that descending price channel. This one is the one that's the red lines, the diagonal lines that you're looking at on my screen. Takes us back to July of 2008, and we can see that the price has been pretty well contained within that descending price channel. So the trend inside of the Euro-US dollar on the monthly chart is what? Up or down? Yes, it's down. Now, not only is the trend down, what the Euro-US dollar has done is it got up to the highest level of that down trend that it could during December. The highest level being not just the channel lines, which are the red diagonal lines, but it actually got up into the trend line. The trend line's using the emotion of the market. It's using the upper shadow or the upper wick of a candle out here, and you're just really connecting those dots. And that's the dark line coming across my screen. So we've seen that the euro, Japanese yen has hit the top of that. Now, if it breaks out of that, that would tell us on the longer term time frames that we would be seeing a potential breakout to the upside and that the trend would have changed. So right now we're up towards the upper boundary, right? We're up towards the upper boundary of the Euro-US dollar on a monthly chart. We're certainly up against that same boundary lines, that same set of boundary lines. It just shows more data points if we were to take a look at a weekly chart versus the daily chart. The weekly chart pulls us back here, and it's also very clear. In fact, the weekly chart here, what's nicer because you've got more co-located opens and closes. Co-located meaning it doesn't matter to me whether it's an open or a close of a session out there. That's what Bud Rolfs taught us, and they work really well. So when we learn something, if somebody teaches us something, we should use it, especially if it works. Well, it certainly works here and helps us really to identify those trends. What we can see here is that channel line was really established back in about May of 2011 on the weekly chart out here. And you can see just using those lines how well they've worked. Because if you take a look at price coming into the week of October 25th, 2013, as price moved up there, guess what stopped it? Guess where the body of price stopped? It happened to be that rising price channel. Of course, the open on the very next trading session, next trading week, the week of November 1st, certainly we saw price moving down. And where it was moving down into, we've got this little competing set of channels going on and trends going on with inside, and you can see you got this little uptrend channel. These are the blue diagonal lines going on my screen. We're getting into this little vortex here, which looks like it just continues to get narrower and narrower. Now, it's important to understand what's also going on with regard to that competing trend to the upside, because it will help you in being able to manage your trades or whether or not you even want to go ahead and trade. So if you're trading on an intraday basis here, inside of the euro, U.S. dollar, I would say you would be looking, because of the trend to the upside here, which is limited because it's run into a ceiling, you would be looking for trades to the downside. So now, Hans, let's go take a look, in fact, and all those trend lines were in place, and they were in place here on the 30-minute chart when the euro was getting up and testing the high on that weekly that we were looking at back here at around 8:30 in the morning. That was on December 27th. We can see here now, and I've drawn in a downtrend channel that on the 30-minute chart, and we'll see if the top of this channel here, we're going to get to experience it, I believe, here today. We'll see if this trend line, actually, this channel line actually holds here. And that's on the euro-US dollar. Now, we should see a bounce out of this. Why? Because the euro-US dollar, number one, it traded this morning down into the hammer candle that took place at 1:30 in the morning, and that was on January 6th out here. That low was 135.70. You can see that price moved down. I think this was after the ADP report out there, pushed down lower. Of course, it was pushing down lower, and what you can see here, it pushed a lower price. It did it on less relative strength. That's always a divergence that you want to be paying attention to. You got a nice little bullish engulfing candle that took place at the session coming in at 9 o'clock. We're getting some follow through here right now. So that says that price inside the euro-US dollar, the queen bee, the queen mom, ought to move a bit higher. The question's going to be, is that higher level only going to be taking us up into the trend line, the channel line, I should say, which would be probably, price-wise, boy, where's that going to take us to? Maybe about the 136.16 level out there. In any event, the longer-term trend inside of the euro-US dollar right now is to the downside, but that downside has limited because of that rising price channel, that competing trend that it's in as well. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, to pick up on where we left off, and somebody might be listening and say, hey, I don't trade currencies out there, so, why were you spending time on currency or what have you? Well, first of all, really what I'm doing is you should be agnostic to the chart that we're looking at. Instead, what you should be focused on is actually the chart pattern. Now, of course, I want to tell you what chart we're looking at because some folks out there may be trading the currencies, and so there might be a little nugget that they're able to pick up on from something that I'm sharing with you. Or if you'd like to learn more nuggets about that, go subscribe to Mastering Probability. Do yourself a favor, get direct access to all of my education, myself, or what have you. I'll help you out here. I don't do this really for me. I do this for you. And so I want to be able to help you out. And so what we're looking for is just patterns that continue to repeat so that you can use these. And I'm going to be getting to, we started off by taking a look at the longer term trend inside the euro-US dollar. I'm going to obviously you don't know this, but I'm going to gravitate towards the actual markets out here. We can use this really on anything, on any time frame, on any stock or what have you. This happens to be the US dollar Japanese yen now that we're taking a look at. And as it also created a little price relative strength divergent pattern out there. One of the great patterns that you need to be able to use, learn, be able to trade. And what I'm referring to is if you take a look at, this is the RSI, it's a 14-period relative strength indicator that we're using. And as it was making a high back here at about 1 o'clock this morning, it was up at about the 104.99 level. Had a little bearish engulfing candle that had formed at 130. And then price moved higher, created a little doji candle right out there at 3 o'clock this morning. As it was doing that, it was doing it with what? It was doing it with less relative strength. So it was making a higher high with less relative strength. And then, ba-boom, then you got a bearish engulfing candle out there. You got an evening star, I should say. So you got really two sets of reversals out there. And really, the importance of showing that, it was also completing an A to B equals CD up. And you can take a look at a couple different patterns. Here's one A to B. You can use either. And A to B equals CD, folks. All you're doing is you're looking for major swing points. In this case here, if we pull this back just a tad, a major swing point, major intersection, like if you're driving out there, it's where you come to where you see the market make a change in a trend, a true change in trend. So right now I'm just choosing the lowest low out here for my A to B equals CD up. And that's the price level here at about 1 o'clock in the afternoon, January the 6th. So that's our A point. Our B point could be the high that came in at 11 o'clock in the evening. That was yesterday as well, right around 104.60, and then pulls back. So there's your 1 to 1.272. A to B equals CD. It would have said 105.13. The actual high was 105. 11, 105, almost 12 out there. So that's certainly a 1 to 1.272 A to B equals CD. You could have used that one. You could also have used this other A to B equals CD. So you got a couple of patterns out here. Here's where you get the 1 to 1 A to B equals CD pattern. So either way, now what it was also doing at that same time was making a retracement. If you come from the high out here at 6:30 in the morning on January 2nd down to the low that we were taking a look at as our swing point, what was it doing? An exact 0.78. Well, almost exact. Exact enough, exactamundo, is the 0.786, there it was, 105.102 was your 0.786 retracement. So what does an A to B equals CD on the way up when it is making a 0.786 retracement do? What's the pattern there? That's exactly right. It's making a 0.786 Gartley sell pattern. Makes a 0.786 Gartley sell pattern with price relative strength divergence with a bearish reversal pattern out there. And now we're going to really understand the real change. We're going to understand the actual strength of the U.S. dollar, Japanese yen, because it's a beautiful pattern, without a doubt, beautiful pattern. It's got all the reversals, and it says that it ought to pull back. Right now, price ought to pull back. Now, what it's done here, may erase a couple of lines. It's already made the first pullback that it's supposed to, which is what? Where's that first level on any type of pattern that is supposed to pull back to? You know it. You know the answer. That's right. 0.382 is the retracement level. You're going to use 0.382, 0.618, and 0.786. All the time you're going to use that. And what the U.S. dollar Japanese yen did was it moved back to that 0.382 retracement, which, by the way, the number is 104.65. Where did it pull back to? 104.65. So it's pulled back to that level. Now it's bounced a bit. It's let some people off of the elevator. It should come all the way back down into 104.36. In fact, what it really should do, it should form a Gartley buy pattern out here. That buy pattern would be right around the 104.36-ish range. And if it does not do that, boy, it's telling us a lot about the strength of the U.S. dollar Japanese yen. The actual pattern that would form there, if in fact we see a pullback, a Gartley buy pattern, this is what you would be waiting for now. Whoops, I grabbed the wrong tool out here. But this is what it would actually look like. Here's what the Gartley buy pattern could look like, should look like. On the, I'd say right about here, the 104.33-ish range out there. 104.43, I should say. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 53 points, trading out at 16,477. S&P off 2.5 points. It's trading at 1835. Composite up 2 points, trading at 41.55. Russell 2000 flat out here, down 93 cents. Apple up $2 and change. Microsoft down 42 cents. Google up $3. Intel up 12 pennies. Forest Labs is the leader in the Clubhouse FRX, not FCX. FRX up by $8. That's up 14% here this morning. Valiant Pharmaceuticals, that is up about $10. Let me see. Who's Forest? Let me see. Is there a buyout out here? Forest Laboratories, let's see, to acquire privately held. No, they're just acquiring a company out there. You've got Constellation Brands. I think they do have my favorite beer, Stella. STZ is the ticker symbol. That's up 8.5% this morning. That's up $6. They reported net income for the third quarter of 211 million shares, $211 million out there, $1.07 per share. Let me see. I don't see the revenue number on it. You've got Arthrocare Corp. That's up 12% this morning. That is trading up $5 and change. McKesson, a distributor of medical products. They're up a nice 3% this morning, up $5 and change. Kihu 360 Technologies up 7%. That's up $5 and change. Apollo Education, APOL, up 14% this morning. Baidu up 2%. Google up $2. Ormed Pharmaceuticals up 3. China Mobile up 283. To the downside, you've got the Container Store, TCS. Cool store. I think I've only been in it once. It was in St. Louis when I first went into my first Container Store, but I'm kind of a nice, orderly, neat kind of a individual, and Container Store certainly fits my personality. Looks like they've got a little bit of a loss out here, a wider loss in their third quarter. Their Q3 sales, $188 million versus $175 out there. I don't know, and they're obviously they had a wider loss. I just don't see what the numbers are. You've got Ingredient, INGR, that's off 3.5%, down 240. Twitter off $1.46. Ambarella, AMBA off 5% this morning. Madden 7, SHOO, that's off about 4%. Steve Madden, I guess that is the software company out there. You've got Acorn down 6%. Clorox is getting bleached this morning. It's off $1.30. It's down 1.5%. So let's take a look here. Now I've got the road. If you're watching us on Tiger TV, thanks so much for doing that. You may be listening on your radio, your mobile device, or the archive, and thank you so much for doing that. Of course, you can't listen to the archive live, but you might be listening to the archive afterwards. Now, you can always catch a live stream of this show by going to the homepage at TFNN.com, and you can, on the upper right-hand corner, you see a button, 3 little devices on it or so. Click on that. This will stream live to your pad, to your phone out there. That's one way to take a look at it. And, of course, the archive is on Channel 9. Now, what I have on my screen, for those of you listening in, radio or otherwise, I've got the cues. And I've got a 30-minute chart on the Qs. I'm eventually going to be getting to the longer-term charts for you. I do promise you that. And if we take a look at the Qs, one of the other things I'm a big proponent of, I'm not saying you have to trade the futures, but I am saying that if you are trading, especially if you're an intraday trader out there, my goodness, if you're an intraday trader on some of the ETFs, And what you want to do is you really do want to get access to the futures contracts, because you've got, and if you're basing your decisions inside the ETFs, meaning the Qs, the IWM, the diamonds, and the SPYs, and you're just basing it off of those charts, you're doing yourself a huge disservice. It's like, I don't know, it's a tool that's sitting right in front of you. It may cost you just a few shekels out there, but that's all. And you're going to get access to more information. Now, if we take a look at the Qs, I've got the Rhodes Momentum Indicator system up here. So we're taking a look at the RMI. You can see really what we saw as the Qs. Now, I want to be paying attention. I'll flip back and forth. I'm not going to do it side by side. Just simply, if we take a look at this, you see these little green formations, little green boxes. They say D is the letter that's inside there, standing for downtrend out here. And you can see the Q. And what you want to be able to do is try to identify when is a trend going to change out there. Now, we took a look at a couple of currency contracts. We took a look at some short terms, and we took a look at that price relative strength divergence. It's a great tool to be able to have. That's another tool that you want to make sure you've got in your arsenal out there. And I'll teach you how to trade that. Just simply go to the homepage at TFNN.com, sign up for Mastering Probability, 30-day unconditional money-back guarantee, best investment that you could possibly make in yourself out there. So when did this trend change down here? And there was a signal inside of the, let me put my little cursor out here. There was a signal out here using the Rhodes Momentum Indicator strategy. That took place here at 2 o'clock in the afternoon. That was on January the 6th out there. But that's one way to play it. But now if I go take a look at the NQ as an example, so I'm going to switch over. We're going to call up the actual NQ. We're going to take a look at the March contract out here, March 2014 contract. And as it was making that same low, let me just pull this off to the side here. Guess what it was forming? It was forming a price relative strength divergent pattern. What did it have? It had a nice little bullish engulfing candle that took place at 12 noon. This would have caught the turn much earlier using that strategy out there, and you would have had more information. You see, because of the way that this is trading, because of the information that you're getting on in essence, a 23.5-hour basis out here, it's providing you with so much more information out here. And then what did we see taking place? We saw all these little red signals, all these little red boxes. Don't disregard whether it says what letter might be in it, whether it's C for consolidation or U for uptrend or D for downtrend. That's not as important as understanding where those signals are forming from. Yesterday, and I've been looking for being able to take maybe a short-term trend and change inside the marketplace, okay? It means it's kind of like swing-type traders. And I've been looking for patterns to complete. But at 2 o'clock yesterday afternoon, I sent out an update to my clients that said we're not going to go ahead and go short here. And we're not going to go short here, and the reason is because what the market's doing, the buyers have control. You see all these little red squares that we see here? No, you void of green squares. It's telling you that the buyers have control. Buyers have control when you see those patterns that are forming. In fact, buyers were in control all the way up until 4 o'clock yesterday afternoon. And I mean 4 o'clock on the nose, because at 4 o'clock, coming into that 4 o'clock close in the stock markets out here, what did we have form up at the high? A price relative strength divergent pattern. And then you got that confirmation of it during that next 30-minute session out here. So now this is going to be very important for us also to be paying attention to. Why? Because if that pattern gets taken out, that tells us that the trend to the upside right now is very, very strong. Because all we've really seen, we saw price move down and price found support at the 55-day exponential moving average. That is the black line going across my screen out here. That's a 55-day exponential moving average out here. It happens to be a Fibonacci summation sequence number versus a 50. So just by changing it by 5 days, you get a nice little Fibonacci number that not everybody uses. But you can use that, that's for sure. So now we're going to be paying attention because we got what should be a reversal pattern that should at least have gotten a deeper retracement than what we have seen thus far. That's where we're going to learn a ton of information about what's going on inside the market. So here's where I want you to be able to take a look at if you are trading, intraday, you're trading you're making decisions on the Qs, the SPYs, the diamonds, or what have you. Go get access. Go get access to the futures contract so that you can make some better informed decisions versions, get access to information that is out there if you're going to trade those vehicles. Now, let's switch over and let's take a look at the longer-term time frames out here. So here's how Steve-O brings it back full circle. I know finally, and some of you are saying, well, you gave the feminine version of the whole story, which means you gave a lot of information before getting right to the point, because the masculine version would, and this is how women and men, if you're listening to us, you got to understand how each of us communicate. And I mean that as respectfully as I possibly can, because if people really understood how to communicate better, life would be so grand. Now, I'm not going to go there at the moment, but everybody who gets it gets what I just said. Now we're taking a look at the S&P 500, and we're taking a look at the monthly charts. I've shown this to you before, but it's how we're able to pull all this stuff back. Because actually, if you go back to the Dow and you go back as far as you can, what you're going to find is that when significant highs have been made and significant lows have been made inside those charts, forget about all of the other patterns that are out there. Forget about all of the astrology that you try to put together. I'm just saying, with regard to being able to identify significant highs and lows, guess what we have had? Guess what we have always had? That's right. We've always had price relative strength divergence. And most recently, we had it back in 2007 at the highs. We had it back in 2000 at the highs. We had it back in 2007 at the highs. And guess what is missing as we speak right now? We do not have it. It is not out there. So long-term, from a long-term standpoint, in fact, right now, if you see the horizontal lines going across my screen, that's the tool that I've created that works with the Ensign software. That just simply goes out and identifies all of the primary trading range boundary lines. It does it by going out and identifying the largest quadrant, the largest number of co-located opens or closes. That's really the dark line going across my screen here. 1279 happens to be the number where that occurs at. It's right around 1279, folks. That means 1280 and 1281 and 1278 and 1277 also qualify. 1279, in essence, is the number out here. Now what we can see is right around 1793, so you can round that to a whole number like 1800, and we're at 1836 right now. You can see on the monthly chart, guess what? We're up above that level. When you break above that level, in fact, it was tested because we broke above that 1798 number. We did that in November. You broke above it in November. You came back in December. You tested it. You rejected that area. Yeah, there's a little rising price channel. Maybe that's some resistance that it could be running into. But guess what this really says? This says at 1884, at least the midpoint between the next two primary trading ranges is very likely. So that's 1884. You're at 1836. 1971 is certainly in the cards out there, because that would be the next upper level boundary line of the primary trading ranges. That's what the message of the market is right now. And so if you are long your funds, you should stay long your funds, and you should maybe be aware of what other signals happen on a daily. But to me, that is nothing more than just theater. It's nothing more than just entertainment for you as to understand what's going on. But right now, there have been no signals at all, whether it is the S&P 500, whether it is the Dow. If we take a look at the Dow out here, let me see if I can go find the weekly, monthly chart here for the Dow. The Dow also showed that price relative strength divergence back in 1999, 2000, back in 2007. And as we take a look at it now, guess what? It does not exist. It is not out there. There is no price relative strength divergence out here inside of the Dow. Pullbacks, can we get those? Sure. But with regard to the longer-term trends that are out there inside the monthly chart, there just is no signal yet. The first signal would have to be some type of bearish reversal pattern. And we don't have that as we speak here right now. Now we're early into the month, but this is the monthly time frame. And so when it comes to managing your longer-term funds, make sure that you're focused on the weekly, the monthly charts out there, and the daily. Just use those really more for entertainment purposes. Now, what is interesting, if we take a look at the NDX 100 as an example, the NDX 100, and this is a monthly chart on my screen out here, this really traveled in a sideways consolidation from about the time frame taking us back into January of 2001, and we broke out of that consolidation with conviction. We did that in November of 2011. No, I certainly wasn't paying attention to this, but I won't let that, I make mistakes all the time. I just try not to make the same mistake twice out there. In this case here, if we take a look at that consolidation pattern and we broke above it, well, it's already made the consolidated move out here. It's already a measured move is what I should say. A consolidated move, measured move. They're really one and the same. So it has made that measured move as it's gotten up to, and that measured move would have come in right around the 34.65-ish type level. You're at 35.58 right now. If we take a look at where prices run into a little bit of resistance, is it natural for it to run into resistance? Yeah, because guess what? It's at the top of its primary trading range boundary line. That number being 3,600, and it stopped at 35.92, or at least that's the high that we got here in December. So 3,600, that's a level that we want to be watching for inside of the NDX 100, because if we can get above that level, that brings into play the 4,000 area inside of the NDX. Again, it's a longer term that we are taking a look at here on the charts right now. You can also see at this stage no bearish reversal signal thus far whatsoever. And that is inside of the NDX 100 out there. Let's go take a look at some of these stocks that are popping and dropping in the marketplace. Let's go take a look at the Container Store. Let's go see what, and the ticker symbol here is TCS, down about 15% this morning. Looks like with volume. So let's go figure out, well, Container Store, this is a new IPO. How about that? So it's an IPO, came out on the November 1st, 2013. Boy, talk about some wide price spread. It traded as low as $32.10, as high as $37. Now pulling back to that level. Last time it had volume, it's on the trading session of December 20th. The low is $38.60. Looks like that is going to be tested. There were 3 million shares on that trading session. However, today, thus far, 1 million shares in only 19 minutes of trading. So it looks like the Container Store is going to go back and revisit the IPO level somewhere around $32.10 to $37. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls.
Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 91 points. That's getting the whack job here this morning. The S&P, it's down about 0.5%. The S&P is off 0.25%. It's down a little over 4 points, trading out at 1833. NASDAQ Composite off really kind of flat. It's down 3 points. Not a big deal out there. The Russell 2000, now it is a big deal. We're going to come back to why it's a big deal. Russell 2000 is off 5 points right now, about 0.4%. NASDAQ 100 almost flat, down 1 point. New York Stock Exchange only off 0.25%, off 27 points out there. Why is that important? Because it's been the NASDAQ that has been the weakest. You cannot argue that. The NASDAQ has been the weakest. The Dow has been the strongest out there. On the NASDAQ here, the NQ, we had that on. What I did was I turned the color coding system off of my screen. So, and the reason why I turned it off is because what I wanted to show you was that 55-day exponential moving average that we were talking about earlier in the show. Again, it's a 30-minute chart that we're looking at. You can see how price moved down. The low so far during this 30-minute session here has been down at, what did I do? I turned that off here. Down at the, give me a second here. I'm going to give you the exact number. Just got to pull it up. 35.45, and we can see that it ran right into that 55-day exponential moving average. So that thing is acting as support, little support line out there. Now the NASDAQ, which has been the weak link out here, all of a sudden showing some strong hands, and that's important because the market will not go lower over time without the NASDAQ participating. That's why it was so important for us to be paying attention to the NASDAQ on the move down, because is that the signal? It was leading us on the way down. And, of course, we saw the change in trend. We saw the push lower was done with less relative strength. We got all the conformational changes that we needed to see to the upside. And now what's also important, though, as I pointed out, was this other relative strength divergence pattern that formed out here at 4 o'clock yesterday. If that gets taken out, because really all we've seen is a sideways consolidation move, boy, it tells you that internally there is some strength out there inside of the marketplace. If we take a look at the Dow itself, let's go see what it is doing. Let's call up this chart right here to take a look at the Dow. And the Dow has really been traveling in a bit of a sideways consolidation area there. There's Basil's 9-period exponential moving average. That's the blue squiggly line going across my screen. So far, the Dow just coming down and testing that level of support. Yesterday, what did we see happen? We saw the Dow close inside of the swing point from December 31st. You close inside of a swing point. Oftentimes, what you're going to see more times than not, you're going to see a test of the high or low of that swing point. In this case here, it was a swing point high, and so you would expect it to see a test of that high out there. And it's looking for those that are inside the Dow. They're looking for the composite to go ahead and pull along. Now, with regard to the composite, and just to put things in perspective out here, let's pull up Let me switch over to the composite. As soon as I can find it, here we go, the composite chart right here. What did it actually do? So what kind of damage did we see inside the composite? Well, if you go back to the swing point low from December 18th, that measured at 39.79.59 out there. And if you go from that low to the high that took place on December 31st out at 41.77, from the low to the high, the dead cat bounce, the .382 retracement was 41.02. What we actually saw was a low of 41.0375. You got to love those numbers out there. So we saw that. Saw a nice big bullish candle yesterday. It has not tested the December 31st swing point. Should test it at least. The low, which is 41.6077. It has not tested that. So we want to be paying attention to what goes on inside the Dow as well as inside the NASDAQ as well as everything else as well. So, folks, it is wonderful Wednesday. If you have to start your day, be safe. Stay warm. It is going to be warmer. It is going to continue to get warmer, certainly here in Florida, and I suspect in your area as well. That Arctic freeze is gone. Folks, have a great Wednesday. Look forward to seeing you soon. Take care now. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.